Hello, good morning, or good afternoon, I should say now. Welcome to Vancouver. My name's Thomas Seal. I'm the Bloomberg Bureau Chief here. I cover anything that happens in Vancouver, and a lot of that happens to be tech. So I'm really delighted to be here with these three great VCs. So Brett, Christine, and Andy. I'll let them maybe introduce themselves, because they'll be able to describe what they do a lot better than I can. So maybe we'll just go left to right. Brett.
Yeah, sure. My name's Brett. My background is starting startups and writing software, and co-founded a company called Posters. It was a blog platform acquired by Twitter, and now I run a venture capital firm called Initialized Capital that does seed stage investing, pretty much just generalist fund, lead seed deals.
Wonderful. Well, hi, everyone. I'm Christine Tsai, founding partner and CEO of 500 Global. I'm based in Silicon Valley in Palo Alto. 500 is a global early-stage venture firm. We invest very early in companies, usually as one of or the first institutional investor in a lot of companies, both directly and through a number of our accelerator programs around the world. This is our 15th year, and it's been quite exciting to see a lot of the change that has been happening over the last few years with AI.
Great, thanks.
And hey, everybody. My name is Andy McLoughlin, managing partner of Encore Capital. We are a seed stage firm based in San Francisco. I describe us as being a conviction investor. All we do is lead or co-lead seed rounds. We don't write small participatory checks. We don't write our first check at Series A or Series B. It's really all about kind of going in early, finding great companies, and then supporting them through their life cycle.
Great. I think we are well over 2 years into this very public kind of rush into AI, and you guys, I'm sure, have been looking at it for longer than that. And things have changed, I think, over the last 6 to 12 months. Macro factors, policy. I just wonder how your investment thesis is changing when you're looking at new early stage companies when it comes to AI over that sort of last 6 to 12 months. Anyone feel free to jump in.
Yeah, I mean, I think for us, it's less any sort of fundamental change and more just momentum towards something, and more momentum and conviction towards something we already saw was coming. In the general sense, our take is that AI is going to upend a lot of technology and technology businesses. In the specific sense, I'm increasingly high conviction that authoring of software is going to more or less free, and that's going to shake up the topology of the software business market and what makes sense and what's investable and what can get to venture scale.
Does that make software as a category less attractive or difficult to defend? I mean, what does that mean for investing in those sorts of pure software companies?
I think that it's hard. I think that there's going to be continue to be a lot of large software outcomes, but I think that at the limit, you're going to be able to have custom software for anything you want, and so you start to think immediately about what needs to be productized, and does this lead to widespread fragmentation and infinite competition for every software business on the one hand, and probably at the other pole, a lot of consolidation and businesses that serve a lot of customer needs beyond anything specific to a vertical or a point solution. I mean, it's kind of hard. It gets hard to reason about because the timeliness is kind of insane. But the pattern match is that I'm blown away every quarter about what the new stuff that's happening. So I guess the net's out at find very talented people who have an aggressive vision for how to what they think is going to come out of the other end.
I think we were talking about this briefly backstage. Andy, you were saying AI as a category almost is not really the right terminology, or increasingly so.
Yeah, I mean, I'm kind of hold this view that if we're sitting here on the stage in 5 years' time, we won't be talking about AI in the same way we're talking about it now. In the same way we don't talk about mobile or cloud. It's just become a fabric of how everything gets built. And we're kind of right in the hype cycle right now. And I think as investors, what we need to figure out is where the opportunities are. And really, the opportunities against the mega platforms, if you're OpenAI or Anthropic, the amount that you can do with the data set that you've built is huge. So where are the places that those companies cannot play, because somebody's been able to get access to proprietary data, or maybe they just have a particular insight that, all of the great AI minds in the world simply couldn't get?
I think that is one of the core issues that I wanted to dig into, really, which is the proprietary data. What are the moats? What are the ways to defend AI startups? There's a welter of AI startups, but only this handful of kind of giant models. How do you look for the sort of signal in the noise and find some of those things that give you that conviction?
Yeah. I mean, I think it's really, I'm sure all three of us will comment that in terms of all the deal flow we're seeing, we probably, for any given idea or any given AI something, there's like 100 other companies that they've either looked at or passed on. So, and it's not, I think that's also not unlike what we have been doing for like 10, 15 years, that we are going to see a lot of founders going after the same problem or tackling it in a different way. I think for us, your earlier question about how does this change your investment thesis, I would assume for all of us, but certainly for 500, it hasn't necessarily changed the fundamentals. But I do think, in terms of what we look at, one of the things that is very fundamental at the early stage is always going to be the team. It's always going to be the founders. And there are probably certain types of questions we ask more nowadays that we would not have even asked a few years ago. But I think one thing that also stands out is amongst just how quickly things are evolving with AI tech stacks and like what is going to be irrelevant or what is going to be important in the next. I mean, you mentioned like every few months. Like I feel like every day I wake up and I think, what am I going to wake up to today in terms of like something that changed or something was announced either geopolitically or within like our world as tech investors. But I think go-to-market is still, at least currently, one of the ways when we look at companies, like what are they doing in terms of when they build their product. Like what is marketing in the age of AI companies? Like what is sales? Like how do you go to market? And maybe even that is going to be irrelevant just in terms of the current paradigm of apps and software. Maybe that all goes away as well. But at least currently, like when we do talk with these companies, ultimately founders are critical. They're able to move quickly and navigate the ever-increasing volatility and changes that happen. And then
you said you ask different questions increasingly. Any come to mind that you're feeling you have to ask more now with the increasing pace or the use of tools or?
Yeah, I mean, those are probably pretty like table stakes questions. Like if they're at this point, it's pretty de facto that everyone has some sort of AI capability, and that's kind of the exciting thing that you don't, like Andy said, you're not going to be asking this. We're not going to be saying we're AI investors. Even now, like it's just de facto. It's like I invest in cloud companies or mobile companies. People did say that for a while.
Internet companies. Yeah.
Internet companies, exactly. So, but there's certainly questions about how they're building, and it's. I think as you talk with them and kind of understand their thought process on how they build their product, how they're thinking about like even different models or different tools, how are they themselves being more efficient? By and large, a lot of the teams are really thinking, how can I be much more efficient? How do I even maybe not need to raise a lot of capital after this initial round? We're just talking about that.
Yeah, I'd love to explore that idea actually. Like, do you see a trend towards that increasing, efficiency from day one or an A round that you think that they might be able to become self-sustaining a lot earlier than they would have been able to 5-10 years ago?
I think it's going to be a lot more common. We've seen companies getting more and more efficient over time, and we don't have to go too far back where a startup would have to build its own data center in order to deliver its product. And of course, AWS comes along and kind of makes that moot. And then everything began to get more and more automated. So there's been a lot of talk about the first billion-dollar business where there's one employee. Now, that's a long way away yet, but I think directionally, it's going that way. And what we're seeing now are companies where they're going to raise seed. They may raise Series A, but then at that point, they're just going to be so efficient and throwing off cash. I mean, we have a portfolio company called GPT-0, which is an AI detector for content. They generated $1 million in cash last month. That would have.
And how many employees do they have?
20-something.
Okay.
I mean, it just would have felt unobtainable 5 years ago.
Yeah, no, fantastic.
I mean, the thing though that I've been assuming the same thing, like even internally, we're getting a lot more done with fewer people, and you see the speed with which people build software businesses is kind of gone crazy. But then in the market, it doesn't always show up, like because it's like there's this like I have this ongoing question where I'm kind of like, what's going to happen to the size of seed rounds? Like you might be like they're going to go down. But it turns out if there's just like a lot of capital swimming around, that doesn't happen in practice because
there's a kind of a crowding in.
People who have billions and billions of dollars have to do something with it.
Yeah.
So it's interesting like how and when that actually like nets out to the one-person billion-dollar.
Yeah, I feel like there's like a whole bunch of announcements of like if that is really true, like you said, what is actually happening in the market in terms of. We just raised a $30 million seed round, and the project isn't quite there. So maybe in the long-term vision, it may get there, but we'll see. There's a lot of demand.
It's sort of a collapse of the funding, or an accordion effect. Yeah.
We have moved out beyond software, and I do actually fundamentally believe that the both timeline and capital structure of a lot of non-software businesses is grounded in software as a component, and so it makes those businesses a lot more approachable for a seed stage firm, because they now fit within a fund life cycle, and you can give them a meaningful amount of money relative to what they're going to be building. So we're doing more stuff in like space, robotics, materials, energy.
And people have been talking a lot about this notion of service as software. So companies that traditionally wouldn't have been venture backable because they just weren't running software margins, all of a sudden, actually, they could be, and Emergence wrote an amazing blog post on this about a year or so ago, saying all of a sudden now, like businesses, which maybe looked like consulting businesses 5 years ago, are software businesses and running at 80, 90% margins. All of a sudden, that's an area that we can be looking at that we were just not interested in before.
Yeah, and it starts to feel like consultancy is no longer a binary distinction, right? This is like a continuum with how efficient you can make people and how that relates to your cost of acquisition of customers.
The work that it takes to introduce and install these new technologies, I think, is getting so fast for more traditional businesses that I guess they all sort of tend towards consulting to be able to sell themselves. Just to change tack a little bit, we're into this AI rush, but there things that people were talking about, early 23 with ChatGPT. Which trends from then do you think have sort of petered out or proven to have fallen by the wayside? And then, second part to this, which we'll get to in a minute, is which ones are sort of about to take off?
I mean, I think the first thing is that the world probably does not need another LLM, another foundational model. We have plenty. We're good. I think now it's all about the applications of those things. I think the thing that I'm really fascinated by, though, is the concept of the infrastructure for the AI economy. We're all investing in AI companies that are using AI to do something that wasn't possible before or just doing it more easily. But what about the companies that are enabling the AI companies? We had Avery Penneran from Tailscale on stage about an hour or so ago. And that, for me, is like a canonical example of a business that really doesn't have a lick of AI in it. They're a software-defined networking company. They build virtual private networks that have become fundamentally important to the AI economy. Like every single hyperscaler now, or AI hyperscaler, is using Tailscale to network together this kind of global cluster of GPUs. And we didn't think about that. When we first invested in 2019, we liked the idea of connecting devices and people, but we never thought into the future where actually this would be a killer use case.
Okay, that's a great example. And any other trends that have fallen by the wayside, or if you want to continue the bullish tone of this conversation, which things will we be talking about in 12 months or 2 years' time? That have yet to break through, but they're just on the cusp.
Please go ahead.
I don't remember what I was going to say. Oh, I think one thing. It's slightly answering your question, but I think a lot of people will look at certain categories like cogen tools or even AI note-taking apps and say, oh, well, that's pretty crowded. I don't want to invest there. But there are obviously companies that have raised like very significant amounts of money. But I still think, let's say, even for example, like AI note-taking, again, many players, very crowded space. But I still think it is. We're still, like broadly, we're still early. Like we ourselves at 500, we wouldn't necessarily invest in models. I would agree with that. But I think what are the applications? What is now possible that wasn't possible with AI infrastructure, both in terms of how we consume, how we work, how we, basically how we do everything. So I even think that in considering tools that may apparently, like everything is going to have a million founders going after it. But, I think that those are still, I wouldn't count them out, I guess. And, despite the fact that certain players in that space have raised, very significant rounds of money, there's just so much that is yet to be seen, even for the rest of this year, rest going into next year.
And
so,
to your point about
so it's hard for me.
Yeah. Huh? Sorry, just we're in the foothills of adoption. So even
Exactly.
if there's 10 or 20 or 100 founders chasing a great idea,
yeah.
only 1% of the addressable market is using that thing right now.
Yeah, so it's hard for me to like genuinely say, oh, there's too, like it's like hyped down, unless there's a good reason for it. But yeah.
Sure. And you were mentioning other categories as well that maybe sort of are AI, but they're energy or materials. I don't know.
In terms of, I guess, to the fall by the wayside question, I think that there's this general dynamic of like getting incremental clarity on like what is the domain of the frontier labs and like what are they building, right? Like you kind of, the first thing you reason through is like, what would I build if I was headed toward AGI? Let's like stay out of that. But then there's like a lot of second order things, and it gets very murky because the whole tooling stack around it, like they might need internally to be efficient enough, or they might need a bunch of application level stuff to generate enough revenue to continue operating. And so I think that the hard part is, I don't know that on like specific things aren't going to work, but in terms of like the businesses that seem durable, I have this vague sense of like building for this current generation of foundation models versus building for one or two ahead. And every time there's a bunch of obvious businesses that become like suddenly tractable of the current generation. And maybe you should really be thinking about the business is going to be suddenly tractable in like 2 years, because that's that's going to position you better longer term.
This is a classic question for a panel of VCs, but I think it's applicable for every new trend, and AI being a sort of meta or mega trend. Are there any heuristics or signals that you're looking for that help you to distinguish, solid, maybe if there's 10 founders chasing an idea, which founder stands out?
Oh, no, I think for all of us, we all invest so early that, it's all about the founders. It's all about the team. My partner Trip has a great phrase. What we look for is team, and TAM. A kick-ass team operating in a really big market. And I think you've got to be okay that you may not back the winner, but for a seed firm like us, even a relatively small exit can actually still kind of be relatively meaningful. And if they're operating in a big enough market, being number 3 could actually still be a billion-dollar outcome.
Yeah, I mean, one example of this, we're investing or committed to investing into a company that I won't mention, but it's very early stage, and they're building in the sales enablement space. So there's again a lot of players in that space. Ultimately, it really comes down to the founding team. They're a team that we've backed before, we've invested in. They had an good outcome, and they have very strong technical talent in the team, both within the original co-founders and the third new co-founder, who's their CTO. They have been just really moving and shipping very quickly. A lot of their customers so far have been all like larger, both private and public companies that are just cold outbound, like not in their network. So that does say a lot. I mean, long way to go, but ultimately, a lot of it is really the founders.
And when software is becoming easier and easier to build, and becoming almost table stakes, what we're thinking about is how can this group of people turn their software into a real company. And I guess we've all had our 10,000 hours of pitches. You begin to develop heuristics about what great looks like, and you're kind of looking for that spidey sense when you meet a founder or set of founders.
Yeah.
We're like, I would do anything to back this group of people.
Yeah, I'd really reiterate that. It becomes more and more important to be the kind of founder who is a little out there in terms of like audacity and wanting to build, like insist on a very, very, very large outcome. Because now the universe of people who can build quickly, like basic SaaS products from 5 years ago is expanded, which is like awesome from like a broad perspective of like just like abundance in the economy. But from the venture perspective, you still need to see through to the people that are I don't know, obsessive and a little nutty about what they want to achieve.
Just on the point about talent, I wanted to ask about where you're seeing talent emerge, and also how that might be changing. We step into potentially murky territory here, I think, because there are some big changes to university funding and immigration. I mean, I would love if people want to chime in with their 2 cents on how that might affect the founders and the kind of founders you're going to see over the coming couple of years.
I mean, kind of back to the last answer, like AI-based tooling broadly, like from education to coding to everything, is like leverage. And so for like people who get a lot done, like a bunch of high leverage tooling like gives them an advantage, more advantage, and you would hope more advantage in a way that is like a little bit more universal, right? Like so now people from all over are going to have more access to the type of things that were like gated by having to be taught it by an individual one-on-one, and now there's like this like amazing education system that anyone can use wherever. So you would hope, and I expect, that it will further allow people, the people that are extremely high agency to stand out, even if they're coming from different backgrounds.
And does that make it possible to spot these people earlier in the process than it might have been a few years ago as well? Like they have access to these tools at high school.
Yeah, that's an interesting question. I mean, the other limiting factor is knowing what good is, right? I think that's and I think that it's one of the highest alpha things in venture is spotting people who are early on in their founding career and kind of aren't level set. They have the talent in them, but they don't really know yet what ambition and drive look like because they kind of haven't seen it based on their context. I don't know. That's a good question whether or not I think AI is a tailwind to that. Probably.
One thing on talent, though, that we've observed over the last probably year, and aggressively so in the last 6 months, is just this kind of confluence back in the Bay Area. I think if we'd been on stage a few years ago, we'd be talking about the rise of Miami and Austin and LA and wherever else. All of a sudden now it feels like, you can build a great company anywhere, but the chances of building a great company are dramatically improved by having proximity to other great companies, and everybody seems to be either moving to SF or spending real time there. And I give Brett's former co-founder, Gary Tan at YC, a lot of credit for this, because basically Gary said, if you want to do YC, you've got to come to San Francisco, you've got to base yourself here, and you've got to be here. And that has just created this amazing community of builders.
Just picking up on something that came up earlier in the conversation, this getting in early before they don't need any funding anymore. Does this increase the sort of competition? Are you seeing that, or is it still a bit early to say when it comes to actually being the investor in an amazing, promising startup?
I think the good news about the earlier you go, the wider the top of the funnel is.
Yeah.
And so, if you're willing to do work, there are very talented people out there you can find. And so, it gets very competitive when it's highly consensus. And some founders starting out, right, they've returned $1 billion in the last couple of years, that's already consensus. But, for the long tail of talented people, they're not consensus yet. So there's always ways to find them. And
yeah, I would agree. I think generally there is a lot more movement towards finding these founders earlier, and to Brett's point about the funnel being wider. And I do. We are based in the Bay Area, so I definitely agree in terms of Silicon Valley always having its place, and currently, right now, it's a really great place to be. That said, we've been backing founders from around the world since the very beginning, and I think there is one thing that's really quite unprecedented about this wave versus other waves is just how much of a national agenda it is for so many countries around the world in terms of this either sovereign AI or just really investing into AI data centers, really trying to become a hub to grow talent, attract talent, and that does really increase the number of potential companies being built. Of course, it doesn't necessarily mean they're always going to be quality companies, but this is not unlike 2010, early or late 2000s. And for the examples of finding these great founders around the world, a couple examples for us where we did that very thing. We found them very, very early. They were not in the U.S. actually, but one was Sakana AI, which is an investment we did recently. Play AI also. Those founders are currently in the Bay Area now. They're down the street from us, but they actually weren't. They were, I think, in Dubai or Egypt when we initially met them. And you're absolutely right. And once there was kind of the consensus and others jumping in, then it became very competitive. But before that happened, when we found them, it was a very different story. So that I think is what is exciting.
Great. I think we're at time, so I'd love to dig into some of these things more, but I'll have to call it there. So I'd just like to say thank you to the panelists.
Thank you.
Thank you.
Thank you.